Welcome to my channel, everyone. This is going to be an important psychology lesson about some of the best trading habits you must master in order to see success. I'm going to go over what it means to sit tight and sit on your hands, how patient and disciplined you must be in trading, and I'm also going to go over 7 very, very important fundamental truths to trading better. And it's what I personally focus on, which definitely propelled me forward with having consistency. And before we do begin, all I could ask is if you learn anything throughout this video, if you could just drop a like, subscribe to my channel, and also follow me on Instagram. I post daily trading recaps and very good trading tips and tricks. The link to my Instagram will be in the description below. Definitely missing out if you do not follow this. Without further ado, let's get right into the video. So it was never my thinking that made me the most money. It was my sitting which made me the most. What I mean by this is I've been trading for about 5 years now, and what's made me the most money wasn't about what I know or how I trade. It was more about my patience and being able to sit through the market, basically sitting on my hands, waiting for the proper opportunity and waiting for the right time to strike. You know, the market is open all day long. People think that just because there's action, that means it's a proper time to trade, when in reality, the best trades come from letting the market come to you, sitting on your hands, and waiting for the market to present its proper opportunity. Now, you could only do this by thinking the right way, understanding the process, and waiting, executing once that opportunity, in fact, does arrive. You have to know what to look out for. You have to know how to think. You have to know how to trade. But the key to big money is actually sitting tight and understanding that you're not going to get paid for your time in trading. You could sit in front of a screen all day long. The only way you're going to be profitable and the only way you're going to make money is if you sit on your hands, you're patient, and you're disciplined enough to only trade once that opportunity does arrive. And it's very uncommon for traders who are both right about the technical side of trading, you know, where is it heading? Why is it moving in the way it is? Basically the auction process. And it's uncommon for those people to also be able to sit tight. It's one of the hardest things to learn. You have to be patient. You have to be disciplined. It comes with more screen time and experience. But once you master those 2 things, that's when you're going to start making big money in trading. Another thing I want you all to understand is that even some of the best strategies are going to lose more than they win. You know, it's normal. You're not going to win 100% of the time. I always say this. You just have to control your losers, that they are less than your winners. Your winners are going to outweigh your losers. That way you could afford to lose more. A lot of traders have a difficult time understanding this and accepting it as a factual piece of information. That's why they struggle. They do this because they are quick to take profits and they are slow to accept a loss. I bet a bunch of you listening to this right now are going to say the same thing. You know, if I'm ever in a green trade, I don't take my profits fast. And whenever I'm in a red trade, I am hesitant to sell for a loss, and that small loss eventually turns into a bigger one. The best traders, the winning traders, find it equally important to let winners ride and to cut losers short. If you're in a winning trade, you know, sell some profit, keep a couple open so you can make a small winner become a large winner and not make a small winner or a large winner eventually be a losing trade, where you're going to cut your losers possibly further than what you expected. So it's very vital for you to cut your losers short and let your winners ride. Now, these are a couple fundamental truths to actually trading better and what you need to focus on. So first one is price action over anything else. You have to focus on price and volume, and believe me, that is all you need. If you're searching for a holy grail, if you're searching for crossovers, oscillators, moving averages, you have to make it as simple as possible. Price action is going to tell you the truest story. Any other indicators other than which do not look at price and volume are going to lag your risk to reward. They are going to lag your process. Anything that lags your risk to reward is going to skew your trading results. So focus on organic price movement, and you can understand this by basically looking at price and volume, nothing else. Next thing you have to do is learn market context. Understand general conditions of the market. You know, what is it telling you? Are buyers and sellers in control? Are we failing to break the highs? Are we failing to break the lows? Is volume low? Do we have high volume? Is there a lot of follow through, continuation? The market is the storyteller, and you have to interpret what it's saying. In this case, the context was the first couple of minutes of market open was a pretty strong rally, lower volume, but we had follow through. As soon as we got to all-time highs, where you can see from this high mark right here, 3677, we failed to break the highs. We failed to stay above it. Volume was not increasing. We weren't really having any new buying coming into the market. We stayed at this level for a little while. Volume decreased, basically saying buyers were not very interested. The buying dried out and price sold off. Look where we sold off to, right into a demand zone. Volume started coming in, confirming this trade. And then we eventually bounced to test the high again. We were flat, consolidation, and choppy. So this is the type of context you have to realize. And in the equities that we do trade, this is the S&P 500. So the equities that we do trade, you might not see any follow continuation. You might see a lot of fake outs versus straightforward volatile movements. Next point is infinite patience. This is the main one I want you all to get out of this video. Good trades are few and far between. You have to focus on the process, not the profits. Profits will come if you follow the process. If you're in it to make long run, if you're trying to get rich quick, you are going to get burned. Focus on the process. And what's key here is you have to trade off of opportunity, not based off of action and not based off of time. You are not going to get paid to sit in front of a screen for 6 hours out of the day if you don't put any trades on when it's the proper time. I could show you my screens every single day. There are tons of opportunities every day. You have to understand your strategy. For me, it is supply and demand. So I'm looking to only trade the market once it comes into a supply or demand imbalance. And again, every day there are multiple different setups. The key is having patience and trading once there is opportunity inside of, for me, a supply and demand zone. So for supply, we're only taking trades short inside supply and long inside of demand. Everything else is noise. So yes, there's momentum. You could get a couple points to the downside, here. But if you're buying to the short side, you're buying this, trying to ride this move down inside of the white space. So not inside of an imbalance, basically where the market is balanced, you might get faked out a lot of the time. So we come into demand. This is my opportunity to strike. You take the trade long. I go back to my screen again and show you a couple other setups. Here we rallied from demand in the morning, rallied right into supply, and we reject supply. Again, you could extract some profits from the market in the white space, but that is not my edge. I have an edge in trading only at supply or demand imbalances. So I'm patient enough to wait for these opportunities to arrive. I do not trade once there is action. I don't trade just because the market is moving. I trade once my edge is present because I know that in the long run, that is going to make me the most money because the opportunity is there. And I'm not trading to make money. I'm trading to focus on my process because I know that it works. Markets over the ego. If you think you are smarter than the markets, you're going to get burned. Never try to outsmart it. The minute you think you're smarter than it, you're going to get burned. I'm telling you. If you think you could come in the morning every day and extract profits, which I'm not going to argue is ever impossible, but if you think you're going to outsmart the market today and you have this whole ego over your head, you're thinking that you're going to destroy the markets, more likely than not, that ego is going to fuel other subconscious emotions in your brain. And more often than not, it's going to make you take more losing trades than winning trades. The market will always outsmart you. Your goal as a trader is just to extract profits from it. Cut your losses short. Never, ever average down and never hope the stock reverses on you. Just accept the loss and focus on the next trade. If I go over here and we look at Boeing, so we were inside of a supply zone, but let's just say not in hindsight. Let's say the market was rejecting right here and we took a bearish position. So if you trade the equity, you're short the stock, let's say here. If you trade options, you are short puts, or you are long puts on Boeing. So let's say the next couple of candles trade, we're short at this point, and now the stock is starting to reverse on you. Number one, before you enter a trade, you have to have an exit plan in case the stock moves against you. So in this case, if you did not have an exit plan and you see the stock reversing on you, I see a lot of traders do this because they are stubborn and because they do not want to accept a losing trade. They'll go back, they will buy more puts, short more of the equity, and add to a losing trade. Never, ever, ever average into a position that you were losing on, hoping that the stock is just going to reverse and come back down and you're going to make money off of it. If you're taking a loss, you deviate away from your plan, accept it, accept the loss, and focus on the next opportunity. There will be opportunity all day long. Believe me, the market is always going to be here. It's never going to disappear. It's going to be here tomorrow. It's going to be here next week. Cut your losers short. Same thing on the opposite side. Let your winners ride. Small winners can be big winners if you focus on the bigger picture and ride the trend. You have to have conviction. I see a lot of traders looking at their chart. Let me pull up the chart here. They see they are in profit. So let's just go on, let's just say Zoom on this case. So let's say we take it long at demand today and we buy calls, we long the equity, whatever the case may be, whatever instrument you're trading. Let's say at one point we are up $2,000 when we long it down here. We're at VWAP and we're up $2,000. We look at our profit and loss and we're like, oh, I'm up 2,000. I don't even make this in a week at my regular job. I'm going to sell profits here. I'm comfortable. That is the wrong way to trade. You focus on the bigger picture. You realize we bounced off of a daily demand zone, higher time frame. The market is never going to go straight up or straight down in your favor. There's going to be bumps in the road. Think of them as, a straight road, and there's speed bumps because you're in a residential neighborhood. You're going to have to sit through a little pain, a little consolidation, some pullbacks, and just ride the trend. We continuously making higher lows. We made a lower high here, or high low here, so it's a stair step kind of method. We come up, we pull back. As long as we are continuing to make higher lows, you ride the trend and focus on the overall picture. A good tip here is maybe, focusing on maybe a higher time frame because it will help avoid a little clutter and a little bit of the noise, whereas smaller time frames might show you kind of a bear picture in this case. So let your winners ride. Make small winners become big winners if you focus on the immediate trend and have conviction to do so. And probably one of the most important things to trading is self-mastery. You are your greatest impediment to your own success. It's you versus you. If you don't know you and you don't know the markets, if you do not know you, you're not going to know the markets. Success with anything besides trading, with anything in life, comes from within you, and comes within what you are thinking in your head, your thought process, your good emotions, your bad emotions. You are your greatest impediment. It's really you versus you with trading. So you have to master yourself first, and that's really when you're going to see the most amount of success in your own trading. So I hope you all enjoyed this video. If you did, drop a like, subscribe to my channel, please, and also follow me on Instagram. It will help me out tremendously. I'm going to try to do more psychology videos like this. Hope you all enjoyed it, and I'll see you all at the next video.